After doing mortgages for over 20 years, this is one of the most asked questions I get. Would you like to know how much you can afford without someone pulling your credit? I will tell you how.
Chris, thank you so much for your...
Thank you.
Thank you so much.
Chris, thank you.
Thank you. Chris.
The MortgageServer.
Many moons ago, when you actually had to go into a bank to get a loan, I had a meeting to go into a well-known bank for a loan. I remember going into a big office building, sitting in the lobby for what seemed like an eternity, and waited to be called into someone's office. They were in a suit looking as professional and polished as they could be. I remember feeling like there was this huge wall between me and them. I obviously wanted a loan. They obviously knew what the bank wanted and was looking for in a buyer. They asked me a series of questions. Where did I work? How long had I been there? How much money did I make? What was my rent? Did I have any assets, checking, savings, 401k? For the record, I had nothing. For me, it almost seemed like a police interrogation, or I was at the doctor's office. You know that feeling you get when you go into the doctor's office and the doctor has all this information on you that they know and you know very little about what's going on? It was kind of like that. One thing I can say, in the banking community, we do not do a great job connecting people and showing them how to make their dreams happen. This is a huge reason for this channel. It's for you to get the information honestly, no strings attached. In the end, I did not get that loan that I wanted that day. I remember feeling like a loser. I didn't know what I didn't know. I was just told no to what I was asking for. So as it relates to mortgages, I will explain a few things that will arm you with what you need to know in a rough estimate and how to calculate how much home you can afford, even before walking into a bank and no credit pull. You will want to add up all of your monthly debts that appear on your credit report. This would include credit cards, auto loans, student loan payments, auto lease payments, etc. You do not want to include items like your water bill, electricity bill, or rent payments. For example, let's say these payments all equaled $200 a month. Then you would want to calculate your gross income. Let's say you make $50,000 a year, which comes out to be $4,166 a month. Most lenders will allow what we call your debt to income ratio to go up to 43%. In some cases, you can go up to 49%. But for these purposes, let's just say 43%. So 43% of $4,166 is $1,791 a month. This means that all of your current debts, the $200 a month plus the new housing payment, need to equal $1,791. Minus the $200, that's $1,591 a month. So your new housing payment, including taxes, insurance, HOA dues, plus the principal and interest mortgage payment, can equal $1,591 a month. Your next step would be to go to a popular website like bankrate.com and look at home mortgage calculators. They are good about telling you the average interest rates and what they are around the country today. You will get an estimated principal and interest payment. You can estimate hazard insurance or homeowner's insurance at $100 a month, and taxes will vary depending on where you live in the country. For this example, let's just say taxes are $200 a month. This would leave $1,291 a month for the actual principal and interest mortgage payment. Based on this example, your estimated purchase price with a zero down would be $198,000 home that you could afford. There we have it. You have just backed into what you can roughly afford for a home. If you find value in this, I would love to hear your comments. I wish you much success in the future. If you like this video, check out this next one.